Okay, and we are live. Welcome back for the afternoon session of Trotec Live. I'm joined here by Ben Matthews from Bluestar Leasing. Bluestar are our finance supplier of choice. So if you're looking at making a purchase of one of our machines, we would normally recommend Bluestar Leasing, so Ben's company. There is no physical tie-up between the two businesses. We've just worked with Ben for a number of years and find that Bluestar are very receptive, very easy to work with. And there's no financial tie between the two businesses either. So just to make that clear, so Ben is here. He's going to explain how financing works. He's going to explain the latest products and monies available to the UK marketplace. But first off, Ben, thank you for joining us. And just tell us a little bit about yourself and about Bluestar so that the people watching. And good afternoon to everybody. Thanks. Continue to comment down in the chat. Sorry, Ben. Off you go.
That's right. Yeah, so thank you very much. So I work for Bluestar Leasing. I have done for over 6 years now. We've had a relationship with Trotec for just over 5 years, and we've worked with many of their customers, doing an awful lot of business between the two companies. So Bluestar are a broker. We're backed by a panel of funders. We also incorporated with our own funding line with a bank, Conister Bank, all part of the Manx Financial Group. And we basically, provide kind of finance for Trotec customers. We can finance, any types of kit, whether it's new or secondhand, and equally we look at kit that people might have bought already. So today we're just going to look at a presentation that we put together to give you an idea of what products are available on the market right now, and the good stuff and the bad stuff.
Bro, top man. Right, I'm going to share my screen for everybody. Like so, that should pop up very shortly. And again, just a point of housekeeping, if to make the screen bigger, if you just double click on it, you should get an icon down at the bottom which sends it full screen, so it'll be easier to read the numbers, etc. But Ben will go through that as we go anyway. So Ben, tell us, why should people be financing lasers, not buying them outright?
So the basic kind of reason that people use finance is to save on cash flow. I don't think now is, I think now is probably the ultimate reason. With the pandemic that's hit in the last 9 months, is a key reason why cash is so important within a business. So finance enables customers to effectively buy an equipment now and effectively spread the cost over the term, which ranges from anything from 12 months to 60 months. And ultimately, it provides companies the kind of the ultimate opportunity to invest and start earning without paying large sums of money up front. And as with any purchase of any kind of business asset to the business, there are tax advantages. We always say that the best thing for you as a customer to do is discuss this with your accountant. Everybody has their own, everyone works in different ways, so there's not kind of one set rule. But effectively, what you can do is offset the payments against your corporation tax bill. But as I say, it's worth speaking to your accountant before you kind of go down that kind of route. The one advantage with using a broker or kind of someone outside of your own bank is that banks will have a limit for every business. So whether you're using that for a credit card, an overdraft, cash, loans, whatever you're using, eventually banks will say enough's enough. So the luxury that you have with a broker is that we work with a panel of funders, which enables us to spread the risk for you. So you're not putting all of your risk in one basket. You're kind of spreading that out there, and it also means you can look at lots of different things. So you might be a medium-sized business, but you might be able to get finance in 3 or 4 or 5 different places. Whereas if you stick with your bank, eventually the bank will say enough's enough. And obviously we all know that it's important to have the bank there ready for emergency cases when you may need cash or help with an overdraft, etc. Flexibility, finance obviously offers you flexibility. You don't have to own the machine at the end. You have that option to own that machine at the end. It also means you can upgrade. So you might be in, you might be in a 4-year agreement. You might be 3 years in and think, actually, I want to upgrade to a bigger machine. There are ways of doing this. There are ways of building in the cost, the cost that you've already accumulated, and things like that. So there are, that's something that we can discuss. It doesn't happen particularly often. A lot of questions people ask me is, can you settle early? Absolutely. There's no fees to settle early. There's no real benefits to settling early either, because the whole point and the purpose of a finance lease is that it runs the course. So absolutely, you can settle early, and I probably asked it on a regular basis, but it's actually very rare customers do, purely because it's a great way of just keeping that cash. And once you start creating the cash and bringing the cash into the business, why would you want to then spend it when the whole purpose of doing the finance in the first place is to keep hold of it? And then obviously, we finance the whole solution from Trotec. So when you buy a machine, if you're buying a new machine, the likelihood is you've probably got a 2-year warranty in there with that, which obviously comes with the service from Trotec, and we will build the whole lot into the equation. So for the first 2 years, you shouldn't have anything else to pay outside of what we, apart from if there's anything obviously goes wrong or in between that stuff with yourselves and directly with Trotec. But we try and build in the warranty, etc. So the whole thing's built in.
Good. It certainly is a smooth process, that's for sure. Okay,
Good.
so we've heard a bit about the CBILS stuff, and we actually did a webinar 2 or 3 weeks ago on CBILS, but it's still a big thing out in the money marketplace, isn't it? Or I nearly said money supermarket then. Can't do that. So tell us about CBILS and what that's all about.
Yeah, so obviously, like Brian says, we did a webinar about this, I think 3 weeks ago, because it's an important product that we wanted to bring to light to all customers that are looking at a Trotec machine. And the reason we've kept it at the top, we will talk about the other stuff underneath, but the reason I want to kind of highlight the CBILS stuff is that right now, obviously, with it's tough. We're in lockdown across the nation. There's lots of businesses that are either closed or struggling or working remotely. And the CBILS products offer you as the business the best terms. There are terms up to 6 years, whereas on standard terms, it's kind of limited at 5. They're the best rates on the market right now. There's lots of benefits, which we'll go on to in a minute. And, we don't want to shy away from it. This is the best product on the market. And for all of your, all of Trotec's customers, we want to ensure that the best products are being sold to enable them to grow their businesses. Likewise, if CBILS doesn't fit you as a business, we still have our other products, which are a finance, lease, hire purchase, and refinance.
So let's have a few details on the CBILS then.
Yeah, so the basic CBILS is it's coronavirus business interruption loan scheme. So it was put in by the government back in kind of April time. Initially, mainly as just a loan scheme, but you will find that lots of customers have gone to banks and secured loans against for this. Generally, I've seen that the maximum loans are kind of getting is about 250,000, and then customers are coming to us for other things. The advantage of it is that you can have multiple CBILS facilities. So the CBILS is a scheme backed by the government. The government support the lender up to 80% of the lend, which has enabled lenders to be kind of lend slightly differently compared to when it's their own kind of way. And the government pay the interest for the first 12 months. So there's obviously, as I've said, there's a range of products available. There's loans, leases, hire purchase, refinancing. Everything that was there is still there, and there's now the CBILS opportunity. So it ranges. It's asset finance. Product starts at 5,000, goes all the way up to 5 million, and the loans start from 50,000. So for a number of the speedy range that Trotec offer, that comes in under the 50,000 mark, which is why the asset finance is so key to this. And the way that we work out CBILS is it's 25% of your turnover. So I know I've spoken to companies who may have taken, let's say their turnover is £1 million. they've already taken maybe £100,000 of a loan, and they don't realise that they can do more. Actually, we can get to 250,000. So you could have £100,000 loan and £150,000 worth of assets.
Interesting. So the benefits for this over a standard product.
Yeah, so the key benefits and features of it is, like I said, the government pays the first 12 months interest, which I think is, on a standard lease, you're probably talking about, I don't know, maybe ranging from 4 to 8%. So obviously that's a significant amount of money that the government is providing. As I said earlier, it's the lowest rates on the market right now. From a 3-year deal, you're looking at something like 1.8%. Even going on to a 5-year deal, you're maybe not looking past 3%. And obviously, the higher the amount of borrowed, the better the rate to some description. However, we can secure that 1.8% on deals from about £15,000 to £20,000. So there are different ways banks do it. Every bank has applied to the British Bank and given them the way that they would like to run. Some of them do it where you pay capital only. So the first 12 months, capital only, government pays the interest. And then there's other banks that are offering it where the first 12 months you pay nothing. So the interest is paid by the government, and you pay nothing until, well, now 2022. 2022. So in effect, you can invest now, as it says there, invest now and not pay anything for 12 months. And then the capital and the 4 years or 3 years, whatever interest is left, is spread over the remaining term. Unlike a normal asset finance lease, whereas a guarantee may be required on a bit of kit because the asset lend is higher than a percentage of the company net worth. The difference with the CBILS is it doesn't work on the net worth of the company; it works on the turnover of the company. So I mean, it's allowing customers to, like I say, go up to kind of 250,000 without any form of security being required. And as I said earlier, the term it goes up to 6 years, and there's the approval rate is longer. It can last up to 6 months. So you might not be looking to invest in this right now, but you might be looking to invest in it in May, June, July. We can get an approval in February, March. Well, that will give you that time until kind of September to get that machine in. As I said earlier, it's all about 25% of annual turnover. Currently, the deadline for this is the 31st of March 2021. The government's already moved it twice. It was November, then it was January, and now it's March. I do know that there is a product that will replace it if this doesn't get extended. We haven't been given full details of that yet, but we do know there'll be something else coming out. So it's not the end of this type of product. And as I say, if you're looking at buying something 6 months' time, why not look to get it in now, and then we can look to go from there.
So, Ben, we've had a question from Mark who says, sorry if this is a stupid question. No such thing as a stupid question, Mark. No. We will answer anything. Oh, that sounded like a challenge to people watching then, didn't it? Have you got to have been a trading business? Or if you've only just started up, are you able to apply for a CBILS? Or do you have to have got turnover for a certain amount of time?
Yeah, you've got there ahead of it. Yeah, no. So you have to have been trading prior to December 19. I believe it's December 19. It may be March. I'm not 100% sure, but you have to have been trading before the start of the coronavirus pandemic in the country. I think the banks are working off December 19. So if you started an open shop in the summer of 2019, then yes. But if you open the business 6 months ago, then no, unfortunately, it doesn't apply.
Okay, makes sense. Okay, and here we are. Next slide was going to answer the question anyway, but you got there first, Mark. Yeah,
so the way the banks are looking at it is, have you been affected? I haven't spoken to a single business that hasn't been affected. I think every business has been affected in some way, shape, or form. It doesn't discriminate against those that were affected but have found ways to make opportunities. It's actually a positive thing. I work with lots of companies who may work in the events world and have found ways to Obviously, there's no events happened in the last year, but they found other resources and other ways to keep money coming into the business. This is a perfect example of that. So have you been affected? Yes. Have you found a way out, or have you found a way around it? Yes. It's still a tick on both. The key thing really is businesses need to have been trading, like I said, from about 2 years onwards, 18 months to 2 years. The reason is this: we have to look at annual turnover, and if you didn't have an annual turnover before COVID, it's very difficult to get a gauge on what turnover was. So it says there that on the last set of filed accounts, so we say as of December 19, was your turnover over 200,000? If yes, then you can apply for a CBILS product. It's only valid for limited companies. I know there's other things out there for sole traders and partnerships. And then the big kind of question, which right now is the kind of stopping point for people, is: did you take the bounce back loan? I know, I think every business I've spoken to in the last 6 months took it. No one really knew what was going to happen on the 23rd of March when we went into lockdown. So people panicked, they took it. I know lots of people that have still got it in their banks. And the bounce back loan is a facility that stops at 50,000. So if your annual turnover is less than 200,000, then the bounce back loan would be the best option right now for you on the market. So you can get up to 50,000, whereas with the CBILS product, you can get up to 25% of turnover, which is sort of why they start from loans start from 50,000, and the bounce back is up to 50,000, 200,000, 25%, 50k. So yes, well, I've got companies that have taken the bounce back loan, they've not used it, because what you have to do is you have to pay this back. You can't have both at the same time. But if you are looking to invest in the next 12 months of more than £50,000 and it's worthwhile, then it's worth looking at. Equally, is your business doing 50% of its turnover from UK business? This is obviously a business, and this is a UK product for UK businesses to support the UK economy. And then is your turnover less than 45 million? I've only had one customer that I've spoken to in the last 8 months or 6 months that had a turnover greater, and there is a product available for people on that thing, but it's not through us. And then there's the big question from, like Mark was saying, was the business in difficulty in 2019? So if your business was in difficulty before COVID, this isn't a way of saving the business, which is why banks like to look back and look at the history. This is about, has your business been affected by COVID, not as a product that will save you if you were already in trouble before then.
Okay, perfect. So just to give us a couple of examples then, Ben. So we've got a couple of examples on screen. Just talk us through what's going on with these two examples.
Yeah, so I wanted to give, when we did the webinar before, I looked at, I was saying some rates and wasn't really backing it up with examples. So I wanted to kind of back myself here. So option one is hire purchase only. So the funder that I've used here is who kind of offers us the best rates from 15,000. All their products are on a hire purchase. So the first 12 months is capital only payments. So I've used an example of £35,000 over 3 years. So your first 12 months payments are £900.20. Then the following goes up to £1,089.20. You'll see the total payable is 36.9. It's only £1,900 over the 3 years. And then I've given you the average monthly rental so that you can work it out over the full 36. And then the equivalent flat rate is 1.85. See, 1.85 is, I've never seen, in the 6 years I've worked in this job, 1.85 has not existed. And equally, even on the other side, which is another funder which offers both lease and hire purchase, and the first 12 months you pay nothing. You may pay, if you do a hire purchase, you're going to pay the VAT, but apart from that, you'll pay nothing. You'll then see that this is over 5 years, so you've got 48 months of 847, slightly higher interest rate. Obviously, you get the benefit that you don't pay anything for the first 12 months, but equally, for £35,000 worth of kit, 3.2% is better than you'd have got probably pre-COVID anyway. So we'll come on to some other examples which will show this kind of stuff.
Good. Cheap cash.
Yeah,
Really cheap cash.
always nice. So
Sorry, Ben. If any more questions come up, please ask them in the chat. And we will be looking at non-CBILS because I know not everybody qualifies. There'll be some non-CBIL stuff at the end, isn't there, Ben?
Yeah. So I wanted to give some comparisons. So me and Brian looked at when we did the last one. We wanted to. This is the first of 3 examples of where we compare a CBILS finance, the current CBILS, to a standard lease, so you get an idea. The way I've worked is we've got a small business, then I go to a kind of an SME, and then I go to a kind of more corporate, bigger company, and we'll compare the 2. So small business trading for 2 years, looking to purchase £15,000. From our end, we do a lot of our due diligence early on. We use Experian, probably the biggest data analyst kind of product in the market. So let's say the credit score of this customer is 40 out of 100. There'll be an average risk on Experian. Their turnover is £150,000. We know that doesn't work for CBILS. They were loss making in year 1. That's probably one of the most common things I see in a new business. Making a small profit in year 2. It's a lifestyle business, net worth of £6,000. What I mean by lifestyle business is kind of a business that you're running, maybe husband and wife, or is it on your own that you are. It's a business that effectively funds your lifestyle. It's not a big corporate company. I see a lot of them in the early days of the Trotec customers. Lots of people they start small, and as they get into the market, they grow and expand. So are they eligible for CBILS? No. However, are they available for any other asset finance? Absolutely. So we can look at a finance lease, we can look at a hire purchase.
So
the
Ben,
big one, yeah.
Just tell us what the difference is for anybody that's not sure.
For
Between finance lease or hire purchase.
So a finance lease is probably the most common product we use. It is effectively a lease rental. As people would know, as if everyone does car leasing, you'll probably know it as a lease rental. So you effectively rent the machine off the bank. So the bank rent it to you. Now, we, as a broker, have trading agreements which allow us to then sell that on to the customer at the end. And we obviously have an agreement with Trotec that we sell it on for another month's rental. So that is a finance lease. There's no upfront costs. It's literally just a monthly cost plus, the figure plus VAT, and it rolls. If it's a 3-year deal, you get to 36 months. We offer you another month's rental. You say yes, you want to buy it. So effectively, for 37 months worth of payments, the bit of kit's yours. Hire purchase is more used on bigger bits of kit or companies that have got good cash flow, who do a lot of finance or don't want to use that cash flow. The reason they've got cash and they don't want to get rid of it. And also, it's all about balance sheet and off balance sheet lend. So I forgot to say, so a finance lease is an off balance sheet lend. So you will not put that through on your accounts on the balance sheet, but I'm not going to get too technical on that. Whereas a hire purchase, you pay the VAT up front. So effectively you are owning it from the start. It will go on your balance sheet as an asset. And at the end of the term, there is just a small transfer fee, which ranges from about £50 to £150 plus VAT, roughly. That's the kind of difference. So, a luxury about, this sort of stuff is our deposits required very, very rarely. Obviously, you're welcome to. If you want to bring the price down, it will obviously help, but you don't need to pay anything up front. It normally just starts with 1 month rental, which normally activates 14 days after the equipment is delivered. So you pay nothing before you have it delivered, installed. You've got to make sure you're happy with it. If there's any problems, Trotec assists, and then we get it paid out. In this situation, director's guarantees are more than likely to be needed. They are if it's a £6,000. The way we work it is looking at your company net worth, and you can effectively lend up to about 30-40% of that before any other added security, which is why if you were looking at this on a CBILS, which we'll look at in a minute, it's based on turnover, so you can get substantially more. So I've just given you some roughly idea figures here. 3 years is 510, 5 years 340. Interest rates for this is from about 7%. flat over the term. So as we move on to the next
So,
one.
Am I right? Just right in thinking that that these numbers may vary a little bit depending on the actual state of whatever business it is you're looking at.
Yeah, of course.
Okay,
Yeah.
so it's down a little bit down to risk from the
Massively,
bank.
which is why a lot of questions I get is, what's the interest rate? Is the first question. How long is a piece of string? Is probably the answer. It's all done on credit. It's all done on risk. So that, you know, the stronger the look in the company, the cheaper the money. Cool.
Okay.
So we look at an SME. So I've got many Trotec customers that I've worked with for the last 5 years who are now probably in this position. Trading 5 years, looking to purchase 45 grand bit of kit. So credit profile, they score 65 out of 100. They would show as a low risk. Their turnover is 500,000. Positive trends, so they've got positive net worth. They won't be making losses. They've got positive working capital. They might have cash in the bank. I've said it all there. And the net worth, let's say, is 50,000. So let's compare the two. Are they eligible for CBILS? Yes. Are they eligible for asset finance? Of course. They're available hire purchase and finance lease. Deposit required? None to both. Director's guarantees. This is the big one. So for a CBILS product, no. But for an asset finance, yes. So obviously, you know, 45 grand into 50 grand is about 90% of the lend, whereas on it's looking at the turnover on the CBILS. So that's the advantage of going down this route. And then obviously you can see the comparison on the pricing. It's about £70 a month cheaper. And then you can see on the interest rates, you know, we're looking at 2.5% compared to about 4.3. So there is, the benefits on the right hand side are quite key. It's lower interest rates. First 12 months is interest free. I've actually done this as the first 12 months is the option of no payments. And of course, there's no guarantees required.
Okay. Next example.
Yeah, the big one. So, well-established company, trading over 10 years, looking to purchase a big bit of kit. The credit profile on these guys, 95 out of 100, nothing really wrong. Turnover of £1 million, positive trends. I just want to highlight that you might have a turnover of £1 million. If you've got negative trends and negative working capital, this doesn't mean you're going to get the best stuff. It's all on the credit. So we're looking at positive stuff here. So they're profitable, net worth of 650,000. So can you, you know, are they eligible for CBILS and asset finance? Absolutely. Same again, both finance lease and hire purchase. Same again, no guarantees required. Obviously here, our director's guarantees required. No. You know, so £1 million, you could probably, you know, we can get at least 250,000 of CBILS products for you. And we're probably looking at getting maybe 350,000, 400,000 done without any kind of security on a normal asset lend. This is where the best rates come into play. So as you can see on the CBILS products, we're looking at 1.8%, whereas on an asset lend, we're looking at kind of 3.2. And it's, you know, a normal asset purchase, you know, rates below 3% are few and far between. Whereas obviously in the CBILS, 1.8% for 3 years. I mean, that's an absolute steal. It's a no-brainer for me.
Okay. Next one.
So I just wanted to finish talking about refinance, because there are, you know, the more we talk to customers and engage with customers about these products, the big question is, you know, did you buy 3 months ago, or, you know, some of them are even up to 6 months ago, and now thinking actually it would be better to have the cash back in the bank. Equally, you might have had to buy because you needed something quickly and you didn't have time to go through the process. We understand. But, you know, anything that you've purchased for the business within the last 3 months to 6 months, you can look to get back in the bank. You know, that cash is key. So, you know, we can put that on a finance agreement. It's called a sale and lease back, or a sale and hire purchase back. And you can get that cash back in the business. You know, we can do all sorts of things. So this is where we're talking about flexibility. There are lots of ways of doing things on both these products, which is flexible for everyone to do. So yeah, I think that's probably about it. If anyone's got any questions.
Does anybody have any questions? Let's just stop sharing that and put us up next to each other. Any questions from the floor at all? Please pop them in the chat. Really appreciate your time today, Ben. I think it's an important thing. We find sometimes people come along and they say, oh, I don't use finance. Anything I want, I just pay for it myself. But that's not always necessarily the best way, especially when cash is tight. You can be prolonging your own ability to start making money at a much faster point in the year.
Yeah, I think it's quite a common question that we get. I get people tell me I only spend cash. Do you pay cash for your house? Do you have a phone bill? Do you have a mobile phone? Do you have a car on finance? There's lots of things that people use finance for that they're worried about for their business. And I can't remember the exact statistic, but it's something like 70% of UK bought assets in the UK a couple of years ago was on some form of finance lend.
Really?
It's very common. And lots of people say to us, it's the companies that can't afford it that do the finance. I'd actually argue the difference. It's actually the companies that can afford it that are doing the finance. And the companies that can afford it know how important it is to keep cash in the bank. They're the customers that use it, because why would you not spread the cost? You can buy something now and effectively pay for a third of it in year one, or even less than that, or 20% of it in year one, when you can start making money. And if we can take advantage of the CBILS products, I'm doing a few deals at the moment where customers are telling me that they're almost going to make the money back on the machine in the first 12 months when they've paid nothing. And you could effectively clear that, depending on which product we use. There are ways around that. Equally, you could do a 12-month agreement and effectively pay. I looked at one for actually a Trotec customer. I think it was about 25,000, looking at it over 12 months. So they literally just deferred the payment for 12 months. Month 13, I think they paid back £200 of interest. So it cost them an extra £200 for another year's of waiting for it. So
yeah, that's a phenomenal deal, and that's the whole point. That's why we wanted to run this session. I know it's not as whizzy with lasers going backwards and forwards, but it's an important part for our customers to know that we have the backup of Ben and his huge knowledge and his colleagues at Bluestar Leasing. And the key is just the same as when you're looking at a laser machine, there's lots and lots of different options, and we like to talk you through the process and work out what's right for you. It's exactly the same with finance products. There are lots and lots of options. Ben's a great fellow, which is why we continue to pass leads over to him, and he looks after our customers. And we see highlights of adverts and things like that with people seemingly offering ridiculously cheap money, but there's always that rate there plugged out of nowhere, which may be available to 0.5% of the people that actually want to apply for it. When you get into it and you start to understand it and you start to talk about how your business is, that rate generally doesn't apply to anybody. And I think we've seen that on many occasions, Ben, haven't we? Yeah,
it's all the time. Customers tell me they've got a better quote, and quite often I will happily eat my words if it's true. And I'll say, well, crack on and go with them. And lo and behold, a couple of weeks later, I get a phone call to say actually that they couldn't honour that rate. That's not the way we work. We want to build relationships with our customers. We're not looking for a one-off deal. We'll take one if that's the way it is, but we want to build a rapport, build a relationship with our customers, and we want to be honest with them. And Mark said earlier, was it a silly question? There are no silly questions, but just ring us, talk to us. We'll help you. We'll find solutions. If we can't help you, we'll try and help you another way. And like I said earlier, I've spoken to customers who are not eligible for the CBILS products. We're not sure if we'd have got kind of where they wanted to get to on normal asset purchase without going through too much of a rigorous process. So I pushed them down the bounce back loan, and they've gone and got a bounce back loan and actually bought the machine. That's got no benefit to us or Bluestar, but what it does have the benefit is that hopefully when you look at your next machine and your business is 3 years old, you'll come back to us knowing that, you know, that's the way we worked back then. And that's key to us is customer service.
Bro, look, thank you so much for joining us.
Thank you very much for having me.
And to be honest, Ben normally joins us at trade shows as well when we're doing proper trade shows. So this is nothing new for him. But really appreciate you coming on, and we'll bid our farewells.